Hello, good evening, everyone, and a very warm welcome to you. And thanks for coming for tonight's webinar. My name is Richard, and I'll be your host tonight. And for those of you who are watching us on YouTube Live, if you want to ask questions later, please come inside our webinar room so that you can type your questions, and we will put forward the questions to our speaker tonight to answer. All right, so let us now begin. The time now is 8 o'clock. And for those of you who are attending our webinar for the first time, and if you would like to be kept posted of webinars like these, please join our OTCS Telegram channel by looking for Online Traders Club in Telegram and join it. It is a channel, it is not a group chat, so you will not be noisy. All right. So who is OTCS? Now, OTCS stands for Online Traders Club Singapore, and we are a non-profit society formed in 2005, and we are a community of traders and investors here in Singapore. And to me, OTCS is a place where we network, share, and learn, and we do it through a series of workshops, courses, and our library. And for workshops and webinars, we aim to have about 10 to 12 a year. It is free for members only. But because of COVID, we are opening it up to everyone, members as well as non-members, so that more can benefit from it, right? These are photos from before COVID. And this photo is taken in our last market update, and it was held in SGX Auditorium, where they are one of our sponsor, and it was very well attended. So I look forward to being able to meet all of you again in hopefully once the rules are more relaxed. Okay. And for courses, we aim to have about 3 to 6 a year. Normally, we will do a group buy with trainers so that we can bring the price down for our members to attend. As for our library, we have over $6,000 worth of resources, but because of COVID, the library is now closed. But otherwise, if you'd like to know the titles, you can look at the PDF on our website. So again, to me, OTCS is a place where we network, share, and learn, and we do it through a series of workshops, courses, and our library. And the fee to join us as a member is $120 a year. However, for a time limited period only, it is only $60. But the good news is, during this COVID period, it is entirely free for all to attend our webinar. So do join us in our Telegram channel so that you can be kept posted. And for more information about our club, please visit our website at onlinetradersclub.org. So again, for those who have just joined us in the webinar, please join our Telegram channel, Online Traders Club, so that you can be kept posted of future webinars or events. And I'd like to give a special shout out to our OTCS crew. They are our friends and members in with us, and they are the unsung heroes behind the scenes helping us with our physical events. So thank you very much. And now for the disclaimer. You are responsible for your own profits and losses. Speakers' opinions are their own and does not represent OTCS opinions. OTCS is office holders, associates, sponsors are not responsible nor liable for your losses. OTCS events are for educational purposes and should not be construed as advice. And when you're in doubt, please seek professional help. And as always, I'd like to start off by sharing that there are two paths to wealth, the driver's path or the passenger's path. So what do I mean by that? So the driver's path, which is also what I call the DIY path, is where you are actively involved in your financial trades and portfolio. So you are the driver behind the wheel. So what do? You normally would read books, attend webinars, take courses so that you can place the trades yourself. As for the passive path or the passenger path, it is the DFY path done for you. Just like the guy in the photo, just sit back, relax, and the expert or the trader or the fund manager will bring you from where you are to your financial destination while you sit back and relax in comfort. All right, so that's done for you. Now, which is a better path towards achieving and reaching your financial goals? Now, to me, there is no better path. Both can be done, and no right or wrong, and no one better than the other. So, for tonight's webinar, it is our privilege to be able to have with us a trainer as well as a trader, first a trader, who will share with us his special and simple trading strategy that works. So that would be the DIY path, and it is suitable for traders of all levels. And later on, you will be able to ask questions by typing into the chat box that you see on the bottom right of the screen if you are on the desktop computer. And if you are watching us on a mobile device, you will need to scroll up or down to look for the chat box. And if you are watching us on YouTube Live, please join us inside the webinar room so that you can ask your questions. And before I bring on stage our speaker, just want to have a flashback or throwback at the good old times where we could have seminars in person. And the speaker is none other than Jonathan Tan. And this photo is taken way back in 2005 and 2006. And Jonathan has been a great supporter for our club by providing us the venue to his office to use. And we have since kept in touch all these years. And it is my great pleasure and privilege to be able to invite him to share with us a simple strategy that works in tonight's webinar. Okay, so without further ado, can I hand over the stage to Jonathan, please? And at the beginning, I have actually requested for Jonathan to give us a quick market update because he can do that very well. He's doing that on YouTube every weekend, and I faithfully follow his videos down through the years so that at least I can be kept posted of what's coming up in the week. So I've specially requested for him to give us a quick market update at the beginning of this webinar before he start sharing his strategy with us. Okay, so Jonathan, please.
Okay, thank you, Richard. I believe everyone can see me, can hear me, right?
Yes.
Okay. Hi, everyone. It's been a long time since I've been doing event with OTCS, even though we have been communicating constantly. I didn't realize that the last seminar we did together was in 2016. Wow. Okay. First few things, market updates. Now, by the way, guys, feel free to ask questions at the end of the sessions. But this will be the agenda for what I'm going to do with all of you today. We're going to have market updates. I'm going to share with you a very simple setup, which is called Oreo, how you can trade with it, and when not to trade with this setup, how to apply to a smaller time frame, and how to increase the probability. Okay, so quick market updates.
Jonathan,
Yes.
please stop my sharing and share your screen.
Okay, apologize. I forgot that step. Stop sharing. Screen share. Screen 2. Allow. Okay. Can see my screen?
Waiting. Not yet.
I am okay already.
Maybe you stop and try again.
Okay, hold on. Stop sharing. Screen share. Screen 2. Allow. No.
Nope.
Shall I exit and come back in?
Okay, can. In the meantime, I'll play some music.
Okay. Apologize for that.
No problem.
How do I exit? How do I exit? How do I exit? I just exit.
Yeah, you just exit, close the window.
Richard is
Yes, I can
okay.
see and hear you. So you can go ahead to try to share your screen. Did the browser prompt you for permission?
Yeah, it did. And I'm here say you are sharing the entire screen.
Hmm. And you're using Chrome.
No, just now all the way Firefox. I will exit and use Chrome and see.
Okay. Sorry to keep you guys waiting. And while Jonathan is trying to fix up the technical issue, for those of you who have just joined us, you are in the right place, and we are facing a little technical difficulty for Jonathan to share his screen. So we'll try to get it fixed ASAP, and we seek your patience with us. Thank you. Okay, Jonathan, I can see you.
Screen loading.
Yes, and hear you.
Sorry guys, we tested twice, and it's one of those that it doesn't work the moment you want it to work.
It happens. Okay, you will need to stop my screen sharing
Yeah,
when you're
now
ready.
because it is still loading. Hold on.
Okay, no problem.
Okay, it says I'm sharing.
Okay, still waiting. The last thing we could try if this still don't work is to reboot the computer.
Okay.
Yeah, nope, not loading.
Okay,
Yeah, let's
give me
reboot.
5 minutes. I'll reboot the computer.
Yes, reboot the computer. Thank you. So sorry, everybody, to keep you waiting. Uh, Jonathan will reboot his computer. Hi, Jonathan. I see and hear you.
Yep, trying to load the screen first.
No problem.
Can you see?
No. Firefox, ah?
No, Chrome.
Okay.
It says I'm now sharing your entire screen.
Oh, that's very strange.
You didn't got rights to give or no rights to give?
Maybe clear cache?
Can try. I
You
exit
try.
again.
You tried. Okay, see
Exit.
you already. See you already. I
Oh,
see
must
your
be
screen
slow
already.
then. Must be slow. Could it be slow?
No, now okay.
Hold on.
I see your
Hold
MT4
on.
blank screen.
I am opening my chart
Yes.
now. Then you count how many second delay.
Yep.
1, 2, 3. Now.
Now.
Okay, no delay.
Okay. Working.
Okay.
Fantastic.
One of those.
One of those things. Yeah.
Okay,
So sorry
guys.
to keep everybody waiting, but we are ready to continue. So Jonathan, please take it away.
Okay. I apologize for all the technical issues. Okay, like I said, I accidentally closed the agenda screen for myself, but I'll start off with market updates. I'll share with you a very simple strategy called the Oreo, and then when not to use it, how to do the setup, then how to trade on a smaller time frame, and how to increase the probability. Okay, so this will be the agenda. So if you have any question, please post into the chat box and I will answer after I finish each section. Okay, now I'm sure a lot of you right now are confused about the market, especially the indices, especially not unusual for the Forex. Okay, let me ask you a simple question. If you see NASDAQ, where's NASDAQ? NASDAQ. I'm still trying to get myself grounded. Okay. You will notice that NASDAQ is now at all-time high. If we close right now, we are very near the all-time high, but the closing price has not. If we close right now, we will close at all-time high. So I believe you would say that, hey, the market is bullish, right? If you take a look at S&P, and you notice we are very near all-time high. So good, you will say that, hey, the market is bullish. But then if you take a look at Dow Jones, it is like a lower high. See this high and this high is a lower high. It forms like a chart pattern called descending triangle, and it's like breaking down. So it is not that bullish. So confusing. And if you take even more and look at Russell 2000, it is not at the all-time high. And you will notice that the US indices are not aligned in the sense that they are all not a single direction. So when it's not aligned, not all in a single direction, bullish or bearish, so should you long or should you short? Right? Now, perhaps you start to say that, fine, I'll take a look at Germany DAX because the European market, it is at the all-time high. Take note, these are all daily candle. I apologize if I go a little bit fast because I'm assuming that you have some idea on how to look at Japanese candlesticks. So I will have to base on that assumption. And these are all based on daily candle. It is at all-time high for Germany DAX. So that's good. But if you look at the so-called second biggest brother in European Union, London, it is not at the all-time high. So Europe, similarly with US, we don't have a conclusion, a single direction, bullish or bearish. And the worst part is, if you take a look at Asia, it is not even uptrend. China A50 is not even uptrend. If you take a look at Hong Kong, most of you will be trading Hang Seng. It is not even uptrend. It is a long-term downtrend. Oh, isn't that frustrating? And then, if you take a look at, a lot of you are trading Singapore index, it is breaking out last month, very happy, and now it is like, what's going on? So why am I saying this? Because if you are confused, actually a lot of people are confused because there's no clear single direction, bullish or bearish, especially over the last 1 to 2 months. Now, some of you may say that, hey, Uncle Powell is tapering. So if Uncle Powell is tapering, that means US dollars is naturally bullish. But did you see there is a bearish candle that forms yesterday? But then if US dollar goes up, gold should be going down. Oops, sorry, this is demo accounts. We are just playing with this account. So let me, let me close off all this trade that we are taking. So if US dollar goes up, then gold should be coming down, but yet gold goes higher. So now you understand why at this very moment, especially the last 1 month, when people thought that trading is easy, but it gets very mixed signal and a lot of traders are confused, right? So if you are also confused, I got good news for you. You are not alone. That's the good news. Huh? And what's the other good news? The other good news is you actually can trade the individual market. It will be better if the whole market are aligned, but it doesn't mean that you cannot trade. You can trade. Okay? So That's the market analysis. And today I'm gonna hijack Richard's agenda in the sense that today I'm not planning to share with you a very simple trading strategy. Today, I'm going to share with you a very complicated strategy that will help you to make profit 100% all the time, even if you're very busy working and you have no time to trade. That means you can actually, before go to work, place an order, and then end of the day, using this strategy, you will have massive profit. And even better, that if you have time to sit in front of a computer for about 2 to 3 hours, using this complicated strategy, you just place an order just by following this formula. I will guarantee you 100% profit by the end of the 1 to 2 hours. So would you like to, instead of learning this simple strategy, shall I hijack Richard's agenda and show you this complicated 100% guarantee profitable strategy that I have been using, and it always helps me to make money all the time?
Jonathan,
Yes,
sorry, your screen sharing, are you using single or dual monitor?
I'm using 4 monitors.
Yeah, because now your screen that you share with everybody is the chat.
Yeah, I'm sharing the chat. I'm sharing the chat.
Everyone can see lah.
Yeah, I want to see whether do they have any response or not.
Okay. All right, but everyone can see your screen, whatever you're
Yeah,
sharing now.
I
Okay.
am clicking the chat right now.
Okay.
Yes?
Yep.
Am I clicking the chat right now?
Yes.
Okay. So I'm showing the chat. So would all of you want to learn 100% guarantee profitable strategy that I've been using that you can apply on the daily candle, or even if 1 to 2 hours, you will guarantee you using this strategy, you will make money? Wow, a lot of you. I'm surprised. Actually, not surprised. Okay. So now I have to make some apology, because if you answer yes, I will actually suggest you to walk away. Sorry for phrasing this. The reason is very simple. There is no 100% guarantee profitable strategy. I think a lot of you have been trading would have known about it. Am I right? You will also realize that why do traders make money? Because traders make money not because they're aiming for 100% profitable strategy. All they aim is a strategy that can help them to make money most of the time, not 100% guarantee. Okay? Now, I'm sure a lot of you been trading, you realize that sometimes using certain indicators do get complicated. So which is why today I'm going to share with you that by the end of this 1 to 2 hours, you actually can walk away from these Zoom sessions, these online sessions, that you can actually using your eyes to recognize a trading setup, and also you can actually trade with it. And I will not guarantee you 100% profit, but I can guarantee you that you realize that the setup is very easy. You can get some profit out from it. How much? I don't dare to guarantee. Will you be profitable? I don't dare to guarantee. But I believe in 2 hours from now, you can walk away knowing how to look at a chart and at least get some profit out from it. All right? So apologize for tricking you. So let's start off. Now, as per mentioned, that this is based on daily candle, my chart right now. Okay? My chart, this strategy is called Oreo. Why is it called Oreo? It's actually not a name coined by me. It's actually a name coined by my students, because they find that the strategy involves black and white. So Oreo cookies have black and white. So first step, before I share with you this strategy, I want you to recognize a very few things. First of all, this is how my chart looks like. Now, I do understand that some of you have different type of background. Okay, let me close all this chart. So we start again. Doesn't matter what chart. Okay, I do understand that some of you would have charts that looks like this. Let's put this. Okay, have chart that looks like this. So let's have a standard convention in the sense that we all have a chart that looks like this. So white candle means the price goes up. Black candle means the price goes down. By default, my chart right now is based on daily candle. So I just want you to recognize that this is black candle and this is white candle on a daily candle. Now, there are certain candles that looks like, now let's put smaller time frame so it's easier to see. There are certain candles that looks like this. That looks like this. This is a candle. This is a candle. In Japanese candlestick, what we call a doji. A doji. I believe all of you can see it. If you cannot see it, please post a message to Richard so Richard can highlight to me. Okay. A doji candle means there is no body. When there is no body, you have to ask yourself, is this body black? No. Is this body white? No. It is not black or white. That's it. Very simple, right? So if don't make something out of nothing, if it's nothing means nothing. Very simple. So if it has no body, it is not black, it is not white. All I want to look out for if the candle is black or the candle is white. Okay, so now the setup for Oreo, we have two different setups. Bullish. For those of you not very sure, bullish means you're expecting the price to go higher. Bearish means you're expecting the price to go lower. Okay, now, what's the setup for bullish Oreo? Bullish Oreo setup is three formulas. That's it. Three very simple formula. B, W, W. That's it. What is the formula? The first candle is black. The second candle is white. The third candle is white. And that's the setup for bullish Oreo. That means you are expecting that the price should go higher, provided we hit the entry price and provided it doesn't hit the stop loss. I'll share with you how I calculate the entry price and how I calculate the stop loss in a short while. Okay, so bearish Oreo means three formula. That means the first candle is white. I think you can guess what's the second and third formula. The second candle is black and the third candle is black. That's it. That means the moment you see a setup where the first candle is white, second candle is black, the third candle is black, that means there is a high probability that the price should go lower. You see? Don't give me, sorry if the words is filtered, such nonsense. You mean that's all? Yeah, that's all. You don't have to make a very complicated strategy. You just need to have this very simple, ridiculous strategy. So now, can I prove it? We look at daily candle. I'm sure a lot of you would have said that all this chart has already passed, and all of us are looking at historical prices. That's why we can say that it has happened. I agree with that. But the problem is, the price that happened in the past did happen. It's a question of whether were you there when it happens. So now if we start to say that, yeah, what will happen to the future? The problem is you are now not in the future. So the question now is, if you were there right then, would you have taken that trade? So ask yourself. So if you notice, example, Germany DAX, there is a black, there is a white, there is a white. So your question now is, but Jonathan, it's a very small black and it's a very small white. Does that count? Let's go back to the basic formula. Black, white, white. That's all. Did I say it has to be a very big or very small? Did I say that the second white must be bigger or smaller than the first white? Did I say that this white must be higher or lower than this black? No. All I say is whenever you see there's a black, white, white, that means the next candle, the moment it hits entry price and didn't hit the stop loss, there is a very high probability the price will go higher. That's all. Don't make things complicated. Go back to basic. Start off simple. Black, white, white. Okay? There is a white, black, black. But I'll share with you the entry price and stop loss. But if you notice, later, you wouldn't have much losses. There is a black, white, white. Black, white, white. There is a white, black, black. But you notice there was profit right here. There is a black, white, white right there. There is a black, white, white right there. So imagine that if you entered here and you hold till today, well, how much profit can you get? Nah, you wouldn't have hold till today. Okay? There is a white, black, black profit right there. You mean that easy? So let me share with you. If you take a look at Forex, it doesn't matter what Forex. You will notice that there is a white, black, black. White, black, black. There is a black, white, white. There was tiny profit right there. There is a white, black, black, but losing money. Don't worry. The first step is to recognize the formula. Then we learn how to enter, when to enter, and where is the stop loss. But what I want you to understand from this first part of this lesson is recognizing whenever there is a setup. And once you recognize that when there is a setup, there is a potential for you to make some profit out from it. That's all. I'm not asking you to do a very complicated recognition, and just recognize whenever there is a black, white, white or white, black, black. Okay, that's the first stage. Now, second stage, where is the entry price? The entry price is very important because if it doesn't hit your entry price, you shouldn't have entered. But if I wait for the entry price, I would have more profit whenever the entry price gets hit, isn't it? Yeah, but did you realize that if you try using this strategy without waiting for entry price, you realize that the higher probability of failure, that means the more often you will be cutting loss. So if you learn the setup, but without waiting for entry price, you'll be using another analysis called AHA, anyhow hantam analysis. For those of you who do not understand what is what hantam means, anyhow can enter analysis. So then why do you bother doing analyze the chart then when you are just going to anyhow enter analysis? You might as well anyhow enter long or short right now. So the entry price is very important. Okay. So using this, for example, this is the setup I'm going to share right here. The entry price must happen on the very next candle after the black, white, white or white, black, black setup. it must happen on the very next candle. Which means that if you are looking at daily candle, it must happen on the very next day. That means if I see this, I wake up this morning and this is what I see, that means it must enter by today. By today. That means technically you will see this candle as just one dash. That means it could be early this morning because the price hasn't moved yet. So in other words, you must enter by today. So take note. The entry price is very important. You must enter by today, the very next day, the very next candle. The entry price is the moment it goes higher than the high of the second candle, the second white candle or the second black candle for bearish. That means this high. Black, white, white, the second white. It must enter the moment price hits this, the moment it breaks the high. What does it mean? Some of you will be asking, can you place a pending order? Yes, you can. Yes, you can. You just have to take note of the trading hours. For example, if let's say euro dollar, even though it is trading 24 hours, ask yourself, if you are in Singapore, what happens in the morning? What happens to European in the morning, Singapore time? You realize that they are sleeping. What happens to Americans when we are Singapore morning time? They are sleeping. So you realize that usually you will not want to place a pending order for euro dollar in the morning. You may want to start to place a pending order usually after 2 to 3 p.m. Makes sense, right? Because you don't want to get the whipsaw. So take note of the trading hours. Okay? So entry price will be the moment it breaks higher than this white candle. Yeah? Where is the stop loss? The stop loss is going to be a little bit harder. There will be two stop loss. Two stop loss. Okay? The first stop loss is out of these two white, find the smallest candle. So the high to low of the smallest white will be the high to low, and that will be your stop loss. First stop loss. That means out of the two white, find the smallest candle, high to the low, and that will be the stop loss one from your entry price. I think that's easy. Second stop loss will be much easier. It will be the lowest of the black, white, white, or white, black, black, if you are bearish. That's it. Now, what's so good about this strategy? It is very easy to recognize. That's first. Second, because you find your first stop loss is the smallest of the white, white for bullish, or the smallest of the black, black for bearish, your first stop loss is actually quite small because that's the smallest candle. Or if you're willing to take a higher risk, then you place it at the lowest of the black, white, white. Now, if you take the bigger stop loss, you may avoid whipsaw. But then if it does trigger your stop loss will be a little bit bigger. So that's the pro and cons. Okay? Now, what do I do? Basically for me is if the white and the white are very big size, I'll take the smaller stop loss. If the white and the white, example, are small size like this, I'll take the bigger stop loss. Because it's small size, so my risk is smaller, I'll take the bigger stop loss. Am I clear? So that's very easy. Profit 1, profit 2, profit 3 will be the risk that you are taking, and that will be the profit 1, profit 2, profit 3. Just an estimation. This is how much risk that I'll be taking. This is how much 1 to 1, 1 to 2, 1 to 3. 1 to 4, 1 to 5, and so on. In other words, the moment you hit TP 1 to 1, you can decide to take all profit or set a trailing stop, or take TP2 profit, set break even, or TP1, or set a trailing stop, and so on. Okay? Another good news. This strategy not only works in index, it also works in Forex, it also works with crypto. Yes, I do understand that crypto is 7 by 25, 7 by 24, but most brokers are using 5 by 24, okay? So the question you're asking, do you take note of the weekend candle? Yes and no. I know it's going to be a little bit confusing. In the sense that I'll take note of the weekend candle, but I also have to understand that the weekend candle volume are a lot lower than Monday to Friday, because most people actually trades Monday to Friday. Crypto does work on 7 days. But if you notice very closely, most of the time, crypto volume on weekends are lower volume. So I'll just take note, but I will not trade aggressively based on the weekend candle. So this is 5 by 24. Does the Oreo works? Yes. But Jonathan, I saw the white, black, but yet the price goes higher. Correct. Because you notice that it didn't go lower. It didn't hit the entry price. So which is why you have never got an opportunity to short it anyway. There is one more here, black, white, goes higher. There is one more here, white, black. It doesn't go lower. You notice it didn't hit the entry price on the very next candle. There is one more here, white, black. Unfortunately, here it did trigger, but you notice these candle size are small. The second black, the two black, these are small. So your stop loss is just right about here. Isn't that minimal losses? Then you will notice there is another white, black, white. It never triggered, so you have never got an opportunity to enter. There is a white, black, never got an opportunity to short. There is a black, white. Unfortunately here, there is a stop loss, and that's a minimal stop loss about here. Later, I'll share with you how you can avoid this type of trade in a short while. Then you notice there's one more here, white, black. On the very next day, can you imagine how much profit is that? And is that it? Yeah, that's it. That's how simple this strategy can be. I did open up a chart, so now I have to set it up. The next question a lot of you will be asking, can I apply it to stock market? This is a stock that everyone is looking, because he's my good friend, Mr. Elon Musk. Let me close off the volume. You will notice that here, on hindsight, there is a black, white, right? But there is a white, black. Yes, but did it go lower? No, you wouldn't have opportunity to short it anyway. There is a black, white. There is a profit right there. There is a white, black. In theory, I'll explain to this later, there is a profit there. There is a white, black. There is a profit there. There is a black, white. What date is this? This is on the 17th of November 2021. What's today's date? Anyone knows?
18.
Oh.
Tonight, go long.
No, you see, I'm not trying to entice you to trade. What I'm trying to share with you this is, do you recognize that it's easy to spot this setup just by recognizing that the moment you recognize that this is a white, black, or black, white. So now you understand how to recognize the setup. Then you recognize that if Tesla tonight can go higher than 1120.50, thereabout, then there is opportunity for Tesla to go higher. And then you now need to calculate where's the stop loss. The stop loss will be the smaller of these two white candle below, and that's it. And then your TP1, TP2, TP3. Did you now realize that the setup is just that simple? Now, there is an issue trading stocks. Two issues trading stocks. Similarly, in Bitcoin or you're trading crypto, there is an issue because with crypto because of the weekend candle. I understand. But you also have to understand that if you're trading stock, there are two issues that you have to take note. First of all, you will notice there is a setup right here, white, black, black. You're very happy to see this setup. And you will start to place a pending order the moment it goes below the second black. But did you notice what happened on the very next day? The price gap down here. And it opens right there. And if you place a pending order, you will get triggered at that low price because you put a sell stop. So what am I trying to share? That's because if you notice, if you use this strategy in the stock market, it does work. But you have to take note that there is a gap. There is a gap. Stock market usually on daily end of the day to the next day, there is gaps. So this gap can potentially kill your entry price or potentially, if you already entered, maybe help you to make more profit. But the gap are there. Second issue, some of the brokers that you are trading could have higher commissions. So if you trade stocks, depending on what brokers that you use, that commission can eat up your profit also. So it's something that if you are trading stocks, you would have already took note of this. So why did Tesla drop right here? For those of you remember, that's because on that weekend, he actually posted on a tweet that says, should I sell Tesla stocks for me to pay my income tax? And 57% agreed that he should sell. And that's why the price dropped. Okay, so if we take a look, Euro pound, this happened just a few days ago. And it dropped tremendously. If you take a look at commodities, such as oil, there is a white, black, black. There is a white, black, black, and that's for today. It would have already triggered entry price today. But tiny losses right now because it rebounds. Let's see whether can it go lower. There is a black, white, white. But this upper shadow, do we count? Remember, the setup is black, white, white. I didn't talk anything about shadow, isn't it? The only time we take concern about the shadow is the last of the three because of the entry price. It must go higher for bullish, must go lower for bearish. So which means only the entry price needs to take account on the third candle, highest high and the lowest low for the entry price. And then you need to take account to calculate the stop loss. High to the low of the second and third candle. Smallest of the second and third candle. Okay? Can you use this in gold? Can you imagine if you enter 1 gazillion contract right there? Can you imagine if you enter gazillion contract on a short right there? Never hit entry price. Doesn't that protect you? So these are the setup right there. But you can say there's a white, black, black. Yeah, but you should notice it never triggered the entry price. Okay. Richard, can I open the floor to questions about setup 1? Anyone of any
Okay.
questions about this setup?
Okay, thank you, Jonathan. And for those of you who are watching us live right now, please feel free to type in your questions about this setup, the Oreos black, white, 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 black, black setup that Jonathan just shared with us by typing your questions into the chat box on your screen. If you're watching us on desktop, it will be on your bottom right. There's a chat box there. Please type your questions there and I will pick it up and ask Jonathan. Okay, so Jonathan, while we are waiting for the question to come in, and as I'm watching you live sharing this strategy, I'm clear on identifying the candles as well as the entry and exit, as well as the entry and the target profits. But what I'm not very clear of is the stop loss. When you explain about the stop loss, I'm a
Mm,
little lost. You say
mm,
the high and the low of the previous two candle. Do you
mm.
mean to look at both candle together and look at the high and the low, or pick one of the two candles and then make a decision from there?
Okay, like for example, like this. Okay, remember that we are looking at the long, so it will be a black, white, white. Okay, so entry price is always the highest of the third candle. That means it must go higher than the highest of the third candle. That's easy, entry price. Stop loss, you will now have to ask yourself a very simple question. Out of these two white, which is the smallest candle?
The first one.
The first white, right? So it will be the high and the low. This distance of the high and the low, remember this is the entry price. Hold on, let me change the color. I'll change entry price to blue color. This is the green here. This is the, because we agreed that the first candle is the smaller one. So high and the low, that will be the green here. That will be the, oops. This will be the actual stop loss. The blue is the entry, the red is the stop loss.
I see. So looking now, we just talk about the long setup. So for the
Yes.
long setup, we look at the two white candles, identify which is the smaller candle, and then take the range, which is the high minus the low, and that will be the distance to use as the first stop loss from the
Yes.
entry price.
Yes.
Okay, got it. So
And then the
just
second stop loss will
second
be
stop loss.
lowest of the black, white, white. That means this is a die must stop loss, stop loss.
Ah, okay. So that means then take the three candles, see where is the lowest low among the three, and that will be the line in the sand, second
Die
stop
must
loss.
stop loss, stop loss.
Right. So normally, why is there a need for two stop loss? Because when I enter already, then if it hit the first stop loss, I'm out already, ma. How come got a second
Yes.
stop loss?
The reason is sometimes if the candle size are that big, some people cannot take the big stop loss like here. Some people cannot take, because this is on hindsight. But you wouldn't know that what if the price really drops all the way down? We wouldn't know. So sometimes that we cannot afford to take such a big stop loss, then you can consider taking the smaller stop loss.
Okay,
So
now
at least your losses will be smaller.
let's stay on this setup here. Between these
Yes,
two candles, the second white candle is the smaller candle, correct?
correct?
So
So
then we mark the high and the low,
this
and
is my entry
basically,
price.
mm-hmm,
Then this will be my stop loss. First
mm,
stop loss,
mm-hmm,
this will be my my stop loss.
mm. So let's say I trigger in, right? So I set my first stop loss as on the first straight line, then that's it already, right?
That's it.
Ah,
You
so
make a
why is there a
decision
need
whether
for
you
the
want to
second
take a
stop
stop
loss?
loss one or stop loss two. You make a decision.
I see, I see. So actually, we will only pick one of the stop loss and use it, lah.
Correct.
Okay, okay.
But there are some that maybe if you I hit the first stop loss, I close half, Then if I set my second stop loss, I close everything.
I see, I see. Okay, so then for the target profit one, two, three, four, that type of that level, right? So it will
Yes.
be dependent on which stop loss I have chosen, and then the distance,
Oh
that
no, the
risk.
target profit will always based on the smaller stop loss.
Ah, okay, okay.
So in this case, this will be the estimation only. TP1, TP2, oops, this one too big. Aggregation, just eyeball, that will be about TP3.
Right, right, right. Okay, clear now on how to arrive at the stop loss and the TP levels. Now, how many TP would how would you decide how many TP to use? And
Okay.
what happens when you reach TP1? Do you shift, your stop loss to break even?
Okay, this question is based on individual then. Okay, so it is not me, it is you. I will use an analogy. If let's say you haven't eaten for a week and you're very hungry and you happen to see a 10-cent coin on the floor, would you pick it up?
Yes.
Because to you, money is money and you haven't eaten for 1 week and 10 cent is money, right?
Yes.
But if you have just finished a buffet, you're very full, and you happen to walk by and saw a 10 cent on the floor, would you pick it up?
Maybe not.
Maybe not. But at least you see $50, I'll pick it up. Am I right?
Yeah.
So the analogy is up to the individual trader. Have you lately are on a losing streak or are you on a winning streak? If you're losing streak, you might want to take TP1, at least try to break that winning streak. Maybe now I've been on the bad luck, finally got a good luck, I'll take the profit first. But if I'm on a winning streak, TP1 only, I never mind. I set break even. I see how far you can go. That's the analogy I'm trying to share. So if you're already on winning streak and you are profitable and you don't mind, um, in the casino, we call it double or nothing. You don't mind what's the worst case? I will not lose money. That's the worst case. So I set it break even. I'll see how far can the market go. So
Okay.
if you're on a winning streak, I would suggest to you set a break even. Then the moment hit TP1, set a break even. Then you move to TP2. Then you decide, do you want to take TP2 or you set it to TP1 or you set it to break even? That's a decision that only a trader can make.
I see, I see. Okay, great.
Mm.
Thanks for sharing, Jonathan. Okay, now let me go to the questions and I'll ask you verbally. Okay. Now, Norris is asking whether this can be applied to indices like S&P 500.
Daily candle, we have a white, black, black. It doesn't go down. Doesn't mean that it doesn't work. Do you notice it never hit the entry price? Can you imagine that if you enter a gazillion contract here, you may lose money a little bit on that day, but you notice that it never hit your stop loss and then goes higher. There is one right there, a white, a black, white, white. It does make money. Okay, there is one right there, a black, white, white. But you notice that till now, it does make some money, not a lot, but at least some. What about here? It does. Oh, can you imagine? Right here, black, white, white. It does. 2 days of profit. If you don't take, this will be about 1 to 1. This will be about 1 to 1 because the smallest candle is right here. There's some profit. If you take right there, there was profit. So the answer to that question is yes. And I love it for that. Okay.
Great, great.
I give
Mm,
you a hint. Norris, right?
yes.
One of the easiest market to use this strategy, easiest in the sense that it does generate a profit consistently, is actually Germany DAX. I mean, it does not mean that it doesn't work. It just works a lot better in Germany DAX. I think no need to see lah. If you see like that, one, whatever, all make money lah. And you notice here, white, black, never trigger entry price. White, black, trigger entry price, but there's a lot of intraday profit right here. Okay, so yes, one of the easiest market to trade is actually Germany DAX.
Right. So that's a thing to write down on your notes, everyone. Germany DAX. Okay, Norris, I hope that answers
One
your
market,
question.
answer. One market not nice to generate profit. I apologize. This is going to offend a lot of people. It's actually this market. Singapore Future SG Free. Not because the strategy doesn't work. It is not because the strategy doesn't work. I want you to notice something weird in all the charts I open up. Did you notice that SG Free got this red color line and the gray color line? Whereas you notice the rest of the indices I open do not have the red color line at all. See here? Daily candle, you notice there's no red color line. Even oil got no red color line. Even Euro Pound got no red color line. Even Bitcoin got no red color line. But SG Free got red color line. What does this mean? It means that it is not the strategy doesn't work in SG Free. It's depending on your broker. SG Free spread tends to be a lot bigger, and this is on a daily candle. If you try trading smaller time frame, which I'm going to explain to you later, you see the gap between the red color, that's the buy price, and the gray color, that's the sell price, and the difference is the spread. So you see here, there's a black, white. Even if you hit your TP1, you are still losing money. So one thing you need to take note of, the spread. Okay?
Very
All right, back to
good.
you.
Very important. Yeah, so please take note of the spread of the instrument you're trading. And I think just now, John, you also answered one of the questions that several attendees have asked, and that is what are the time frame that this strategy can work on? So
Daily.
daily.
Yes.
Okay.
For
So
part one, daily.
part one. Okay, part one. There'll be more coming up soon. So that is the question. And another question coming from Intake, Dr. Neo, he's asking how to deal with the different server time offset of different brokers. Does it matter?
No, it doesn't matter, but you have to stick with the broker that you are using. What I'm trying to say is, let's say this is just XC and this demo account, and you say that, oh, XC got, for example, XC got white, black, for example, XC got white, black. But because let's say IG server is on a different time frame, you just trade with IG because it is this broker says white, black, you just trade with another broker. When another broker doesn't show you the white, black. No, don't do that. If you want to use another broker that has a different 4-hour or daily time frame candle, you stick with that broker signal. That means don't use another broker to trade this broker because another broker got that signal, unless you want to see the other broker chart only. That means you ignore your broker chart and you only see the other broker chart. That means, or else if you, example, wow, this one I see XC because XC got white, black. Then I trade with IG because IG got white, black. Then I trade with OENDA because OENDA got white, black. I trade with CMC because CMC got white, black. So you'll be trading anytime, anyhow, anything. So what I'm trying to say is stick with that broker chart that you are trading.
Right. Thank you, John and Dr. Neo. I hope that answers your question. Okay, next question is coming from Karen, and Karen is asking, how many pips should we place the entry price above or below the entry trigger of the candle, or do we
The
just place it right at there?
Not right at that, just a little bit above. In the sense, just a little bit. I know a little bit can be what, like for example, a little bit in two decimal digit here can be just 1 point or half point, just a little bit. But what I'm trying to say is just a little bit is don't like this is the high of this candle. Don't like that's a little bit daily candle. That's not a little bit. That's a lot. So what I'm saying, just like a little bit, a little bit.
Right.
So in
Okay.
forex, it can be 1 pip. Forex can be 1 pip. Dow Jones can be 1 point. Just that measurement of a little bit.
Understand. Karen, I hope that answers your question about how far away from the entry trigger candles price, high or low, to
Like
put
sorry,
your
for example, like silver, because price of silver is a lot smaller because it's only $28.350. So just put 10 cents. That's a little bit. Don't put like $1 for a $24 counter. That's a lot. So just put about 10 cents. That's what I mean by a little bit.
mm,
Sorry, not 10 cents. 1 cent. 1 cent. Sorry,
one side.
1 cent. 1 cent.
Right. So basically, we just want to be sure that the price action clear the high and touch touch the higher
Yeah,
high,
just
go above lah.
yeah, go above.
Understand. Okay, good. So Karen, I hope that answers your question. Let me see.
Silver 1 cent. Not 10 cents. Sorry, 1 cent. 1 cent.
1 cent for
Yeah,
silver. Okay. I
that
think
means
there were
zero point
quite a
zero
number
one.
of questions about which is the best time frame to trade it.
Ah,
As Jonathan mentioned, what he has just shared is on daily. He will go to the other time frame next. Then we will have another
the time
Q&A.
frame you also have to take note of. For example, right now is 9:12 p.m. Hong Kong futures are open. Japan futures are also open. So question is, do you want to trade? I usually don't. I prefer to trade the country that are active during the time that you want to trade. Example, right now, European market is open, US market is open. So I must well trade the European market, US market, rather than trading Hong Kong, China A50, and also Australia index. Just example. Like right now, I preference to trade euro dollar, pound dollar, rather than Aussie dollar, New Zealand dollar. Ask yourself very simple question. At 9 p.m., what time is in Australia, Sydney time? What time is New Zealand, Auckland time? So that's a question that you can ask yourself that says, are they awake or are they sleeping? That will at least make me decide what counters to trade, what counters to avoid.
Right. So let's say if we stay with the daily time frame, and we will be prefer to trade the market where the instrument is currently actively traded. That means during their cash market hours.
Yes.
Okay. So on this note, right, because of the daily candle, we are using the daily candle of the last 2 days as well as the current day to make decision. Let's say it's the Aussie 200, for example, the index. So there is already a candle for today, right? So okay, let me use another example. Let's say S&P 500. So and ES futures right now, and today there is already a candle already, correct?
Yes.
Yeah,
Yes.
and it's moving. So
Yes.
let's say we have a black, white setup in 3 days ago, 2 days ago, and yesterday's candle on the
Mm-hmm.
ES,
Mm-hmm.
right? So today the futures candle is also moving, and it
Mm-hmm.
has crossed above the entry price,
Mm.
but it's during the outside the cash hours of ES.
Mm.
So we wouldn't have entered, right?
Correct.
Okay. So I'm waiting for 10:30 tonight.
No
But
need. After 4 p.m. should be okay already because the futures are running, like S&P futures are running almost 24 hours. So actually, European do trade American index futures. So usually for me, after 4 p.m., I can look at US market.
because
But
it's
my
the actively
bias
traded
is
one.
preferred for European market.
Understand. So, actually, back to the question I was asking, right? So, let's say the futures market is not open yet.
Mm,
Okay. Let's say DAX at 2 p.m.
mm,
The European market not open yet, but already have a candle for today.
mm,
Let's say it have crossed and break above the entry trigger, but
mhm,
yet come back down. But
mhm,
European market not open yet.
mhm.
So I can still wait for the entry again when the Euro market opens, correct?
Okay. First of all, you have to ask yourself the question, is the price going the direction that you want? What I'm trying to say is, if you notice there is this setup right here, let me show this setup. Okay, can you all see this? My paint?
Yes.
Okay, you'll notice that, oh, by the time, let's say it opens here, and let's say by the time that it sees is right about here, by the time you see the chart, the price, let's say at 2 p.m., 3 p.m., is already right here. That means it's already above the entry price. I'm talking about this candle right here. Okay, so now the question is, if after that you see maybe at 4, 5 o'clock, the price comes down right here, right to this entry price. So should you enter? Am I right?
That's one scenario. The second
Okay.
scenario is that it is below. It went
Yeah.
up and came back down.
It went up. So now it's coming down.
No, that means let's say at 2 p.m. It is in the body of the second white candle.
Okay, right here.
Yes.
And then you actually go up here, you would have entered,
If
right?
the market is open at 4 p.m., yes.
Then you have entered. So no issue right there.
No issue
So
there. Okay.
because you will be hoping that it will continue to go up. Okay.
Understand. So
What's the
back to your
hardest part
scenario.
is, what the hardest part is when the price already, you want to enter, the price already goes up. And then it comes down to that entry price. The question now is, should you enter?
Hmm.
So my question to you is, the price going the direction that you want or not you want? So you notice that if the price are already up and then start to come down, that's not the direction that you want to enter. Am I right?
Hmm.
So you should not enter at this entry price because it's going down. You don't want to enter when the price goes down.
Hmm.
But if you have already previously entered, you hope that please don't hit my stop loss, don't hit my stop loss, don't hit my stop loss. Okay? Now, however, if the price goes lower, then goes up and hit the entry price within this candle, yes, you can enter. That's because now the direction is the price you want it to go. You notice
Right.
the scenario is a different scenario.
Understand.
One is the hit entry price. When the price comes down, no, you don't enter. But if it goes lower and now goes up, yes, you can consider to enter.
Understand. Okay. Good. Great.
Okay.
I'm clear on that part. Let me see. Okay, Stanley is asking, do you close the trade at the end of the day or end of the week, or you purely let the TP and SL take care of it?
I usually let the TPSL take care of it, depending on how much TP, but I already set the SL at least to break even. Okay. The only main time I will really think about that position is on Friday midnight Singapore time. The reason is, if it's Friday midnight Singapore time, you ask yourself, what are Europeans doing? They'll be already be celebrating. What are Americans doing? They'll be thinking about barbecuing, especially right now during the fall is American football time. Touchdown. So I'm not saying that they are not working. I'm just saying that they are thinking what to do for the weekend. So that means you would expect that after Friday midnight Singapore time, the volume will start to drop. And if the volume start to drop, plus on a weekend, there could be a gap on Monday. If the gap is towards my direction, I'll be happy. But what if the gap goes on the opposite direction? So on Friday midnight, about there, I would think that should I want to close and maybe think about the situation on Monday, or do I want to take the additional risk? Now, for now, is somewhat quiet, so it is all right. But if you remember, a few months ago, on a weekend when there is the flu, I apologize because I think this will be recorded and posted. So YouTube sometimes censored COV
Yep.
that. Uh,
Don't
so
say it.
yeah, I know. So during the flu, you will notice on weekend major gap up, gap down. And during Uncle DJ Trump election and post-election, major gap up or down. So now is we are used to the news. So you just have to take note whenever there are major news that could affect the market, the weekends are something that you have to seriously consider.
Right, right,
Yeah.
right. Okay, so does it mean that maybe don't take entry on Friday?
Or usually after 11 p.m., notice is earlier, I don't trade much after Friday 11 p.m.
Right. So don't even take entry even if it triggers lah.
I would have
So as
one
to
last
avoid the
entry at
weekend
Friday opening price lah, US opening time lah. That will be my last trade of the week lah.
to enter.
Enter or exit, but because I use different strategy. I look at the US opening hours, trading at the US opening hours.
Right, right, right. Okay, cool. So let's move on. Hmm, I think we have tackled the first batch of questions. Let me see. So, okay, R is asking if on the day of the trading, there is major news, FOMC
Mm.
or some other news, rate news on
Mm.
Forex Factory, right? Do we still enter?
You have to ask yourself, yes, news will have a lot of major movement. There is a possibility of a whipsaw. But have you ever wondered what if the news goes towards the direction that you want? You would have a lot more profit, right? But if the news goes against what you want, your stop loss would have at least protect you from there.
So the
And
answer
you
is
will
yes.
notice that, and you will notice that sometimes there are slippage. So whenever news that are major, what are the news that have major slippage? Used to be non-farm payroll. The word is used to be. Do you notice lately, over the last, I don't know, since Janet Yellen or whatever, the non-farm payroll hasn't been that volatile as compared to before Bernanke and Ben Bernanke. So you will notice that, yeah, sometimes there are major news that maybe because of slippage, you don't want to place a pending order or want to exit, but it depends on the news. Lately, the news hasn't that go crazy news.
Hmm,
Okay?
not so volatile.
Yeah, lately the market hasn't been that volatile.
Understand, understand. Okay, let's take the next question. So, I think this one, Raymond is asking if the next candle did not trigger, then we cancel the buy stop or sell stop order to enter, correct?
Correct. It must
Okay,
happen on the very next candle.
right. So it must have the entry must happen on the very next candle.
Mm.
So, and I think Jonathan, you did mention earlier as well, the size of the candle does not matter. It's the color of the candle that matters, and the
Size of the
location.
candle only matters to calculate stop loss.
Yes, correct. But for the setup, it doesn't matter,
Right.
right? Just the color. So the
Mm.
size and location, which one higher than which one doesn't matter,
Mm.
correct?
Entry
So,
price is always based on the third candle high or the third candle low.
right. So I hope that also answers Z's question because Z is asking about whether the location and the size of the body matters. So it does not matter, Z. Okay, let me see. Okay, Stanley is asking, based on your experience, what is the percentage of profitable trades?
The probability of this is about 89.7%. Hold on. But if I tell you that this probability is 89.7%, and every time I make a profitable trade is only $1, and the 10.3% lose is lose $20. Is this good? That means the 89.7 winning trade, I only win at $1. And the losing trade, the 10.3% lose, I lose $20. Is this strategy good?
No.
Yeah. So you will realize one thing, that a lot of people always ask two very simple questions. And that's where we, the traders will know how to basically take your money to put into our pocket, because you will notice that probability of success can be manipulated. Percentage of return can also be manipulated. We can tell you a number that you want to listen, and then we take your money. But it doesn't mean that it will be successful. But I can tell you that based on this strategy, you have seen it. You can actually test it yourself. The probability is definitely more than 50-50. And why I can't give a percentage is because I got smaller stop loss, and sometimes I take TP1, TP2, TP3, TP4. So I don't need the probability to be more than 50% in order to generate profit, but it is more than 50%.
Cool. Okay, I think we have covered the questions for
Okay.
now. So let's move on.
Okay. Now, let me ask you a simple question. This is Germany daily candle example. This is a setup called white, black, black. That's the high. That's the high.
Black, white, you mean?
Black, white, white.
Okay.
Okay, the most on the right hand side. So my question to you, if you see this, what do you expect? Let's say this is today, this is yesterday. What do you expect today to do? What do you think Germany next today will be doing? If you see that this is black, white, white, and it's yesterday, today, what will you be doing? Will you be longing or will you be shorting?
There's a bullish setup
Yes, that's a
waiting
bullish setup.
for
So
buy
today,
stop.
you'll be longing, right?
Yes.
Okay. So now, if today you belonging, so this is on the 1st of November. Okay, if you see on the bottom right here, this is on the 1st of November. So my question to you, what will you be doing on the 2nd of November? Will you be longing or shorting?
I'll be looking too long.
Will be looking too long. So in other words, if you are looking too long, let me zoom in closer so you can see. If you are looking too long, will you be looking to look for white, black, black, or black, white, white?
Black, white.
So you realize that now you're combining two time frame strategy. In other words, it doesn't mean that the white, black, black will not work. But because you realize that daily candle yesterday is a bullish setup, today I want to concentrate not on the bearish signal, but only concentrate on the bullish signal and ignoring all the bearish signal.
What
Does
time
that
frame
make
is
sense?
this, John?
This smaller time frame, 15 minutes. You can trade
Okay.
15 minutes, 30 minutes, hourly.
And
So
even
what I'm trying to say is you can now break down into smaller time frame that says that, okay, I got about 2 to 3 hours to sit in front of computer. Okay, Germany DAX yesterday daily candle is black, white, white. So today I think Germany DAX will go white, provided it goes higher than yesterday high. Fine. Then anytime it goes higher, I want to concentrate on all the white, black, 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 white, white. So now you're looking at different time frame. So the next question a lot of you be asking is, what time frame? What time frame? Now, just now we are looking at daily candle. So we use daily candle to trade smaller time frame. But take note that indices, I don't look at 4-hour chart. Let me share with you why. If you notice that, let's say Singapore stock market opens at 9 o'clock, Singapore stock market. 4 hours later, it's lunch. 4 hours later, time to go home. So if you notice that if you're trading indices, futures or CFD, you actually only got, in theory, 2 4-hour tradable candles. The rest are aftermarket. So 4-hour candles on indices are not a good candle to trade, which is why I see, but I don't trade the 4-hour candle. Makes sense, right? There are more 1-hour candle in 8 hours, but they are all 24 hours. There are more 30 minutes, there are more 50 minutes. Make sense? But I always avoid the 1 minute and 5 minute. It doesn't mean that it doesn't work. Let me show you exaggerated Bitcoin, for example. It doesn't mean that it doesn't work. But you will notice that daily candle, you don't see the red line. Hourly candle, you see the red line. But the red line to the gray line is small. So you notice the candle size. If let's say I take risk 1-to-1, I still can trade hourly candle in Bitcoin, for example. But if I trade like 5 minutes or 1 minute, you will realize that even if I take the risk 1-to-1, after paying my 1 candle range, 50-60% of my profit actually goes to the spread. So it's not worth taking it. It doesn't mean that you cannot make money, but the percentage of the profit that you are getting, 50, 60, 70, maybe 80% of their profit pays for the spread, and you're taking 100% risk in order to make what, 10, 20% profit, it's just not worth it. So the smaller the time frame, the percentage of your profit versus spread gets bigger. So sometimes it's just not worth the time and effort. So which is why I usually avoid 1 minute and 5 minutes, because it's just not worth my time. Even crypto, 15 minutes, I also avoid. Usually for crypto, I prefer 30 minutes or higher. So back to indices, which is why the minimum time frame I'll trade is 15 minutes. I don't look at smaller than 15 minutes because it's just not worth the risk, not worth the time and effort. So for indices, in summary, I'll look at 15 minutes, 30 minutes, hourly. I skip 4 hours, then I go to daily. I look at weekly, but I don't trade much weekly. I don't even bother to trade monthly, mainly because there's a rollover, there's a swap, daily calculator swap, if you're trading cash contract. So it's just not worth the effort. Okay? If I trade Forex, I will trade 15 minutes, 30 minutes, hourly, 4 hours, because Forex is 24 hours moving, and daily. I'll still look at weekly. Once a while, I'll trade weekly, but I'll definitely avoid monthly. So that's the time frame you could look at. Okay? So this setup basically use the daily candle. Once you understand the daily candle direction, then you can use on a smaller time frame to bias with the direction that you see in the daily candle. Okay, now euro dollar on hindsight. To want this one, because this one can also this one small movement. Let's find a bigger movement. No need. Euro pound. Euro pound lately has a big movement. Here, euro pound. Here, white, black, black. So on this day, on the 16th of November, doesn't matter 15 minutes, 30 minutes, or whatever. 16 November, because I know there is white, black, black. Today should be black. Then today, I concentrate on all looking out for blacks. This one never trigger, so no. Just concentrate on looking out for all the blacks. Okay, now, some of you will be asking why I don't look at here. How come I'm not looking at here? That's because here is Singapore morning. Europe is sleeping. British is sleeping. So why want to trade something that when both pairs are sleeping? Makes sense, right? Trading don't have to be complicated. Just have to, does it make sense? Okay, so that concludes my second part.
Right, cool. So, for all those of you who are watching us live, if you have questions for Jonathan for this second part of the sharing, which is to use the daily time frame to trade the lower time frame in the same direction as the daily time frame, please type them into the chat box that you see on the screen so that I can pick it up and ask Jonathan. All right. So please type in your questions to ask Jonathan. So maybe correct me if I'm wrong, Jonathan. Clarify my understanding as well, is that you take the daily time frame for the setup, and then once you have the setup triggered, then go into the lower time frame in the new day, and then you no longer look at the daily time frame anymore. Just
Because
focus on
you
the
have a certain bias direction.
correct. Take the bias, directional bias from the daily time frame setup. Then in the new day, you will only be looking for the same direction but in a lower time frame.
Yes,
And
that's right.
preferably to only look for the lower time frame setup during the active trading hours for the pair.
Correct.
Okay, I understand. So let me see what questions we have.
Right, this just happened in Go 15 minutes, just a short while ago.
Oh, please, please.
Now already
So,
happened,
for
just happened.
example, like gold, right? Is
Yes.
there a active trading hour? It's like
Usually is in the afternoon and evening to early morning, like before 2 o'clock in the morning, Singapore time.
right, basically kind of like Europe hours lah, and maybe
Yeah, Europe, American
into
hours.
the US hours.
Yes. Does
Right.
Asia active? Yes, Asia is still active, but it is more active during Europe hours because Europe and Asia are concurrent. So usually, rather than just Asia alone, at least there's an overlap. So that's why I usually look in the afternoon because Asia and Europe overlap. Evening is Asia, Europe, America overlap. Early in the morning, like before 2 a.m., is because Europe and America overlap, rather than just early morning Singapore where only Asia and there is no overlap.
Mm. The more active, the better lah.
Yes,
Understand. So we stack multiple active hours together. That will be the ideal time to trade.
yes. So
Okay,
which is
cool.
why a lot of people say, should I quit my full-time job in order to be a full-time trader? My goal to you is why quit your job and have, that means you quit one income to go into another income. Why not think bigger? Why not have both income? That means still have your full-time job, but during the evening, don't volunteer to overtime, but at least sit down like right now, because the hours of between 8 o'clock to midnight, 8 p.m. to midnight, you have Asia is awake, European is awake, America is awake. And this time between 8 to midnight is the best time to trade. So why quit your full-time trade job to to and now depends on one. I'm asking you, why don't think bigger, have both income. Have your main job income, finish your job faster, quickly have your dinner, 8 to midnight, look at the market. Then you have two incomes.
Food for thought. Right. So let's come to the questions, John, shall we? Okay, so let me see. Raymond is asking whether you'll work on gold. I think the answer is a yes, right?
Yes.
Okay. And okay. Um, Danish, Joshua, and John is
Right now.
asking,
Yeah.
right? Um, let's say we use in this second strategy that you just shared with us, using the daily setup as the directional bias to trade the lower time frame. So when
Mm,
we go into the lower time frame to
mm.
trade, do we utilize the daily time frames, entry price, stop loss, TP, that kind of thing, or we only use it purely for the directional bias?
Hold on. Example like this. You use the day. It depends on you if you got time to trade the smaller time frame. If you don't have time to trade a smaller time frame, then you cannot look at smaller time frame. So there's a pro and cons. So it's you. Second is, once you use the daily candle, directional is bullish bias. That means you know that the price goes higher. When will you know the price goes higher? The moment today goes higher than yesterday high, isn't it? So that will give you the confidence that it's going the direction that you want. So in other words, let's say this is yesterday high, let's say, and now the price is above. Then you'll be more confident that it's bullish bias the moment it goes higher than this red line, which is yesterday high, example. So as long as price is below yesterday high, you don't go aggressive. It's only after you still can enter, but don't go aggressive. It's only after you've entered, then you can go aggressive. So now the question is, when do I actually enter? Same thing. This is a black, white, white. My entry price is the third candle high. My stop loss is the smallest of these two white. You notice it's the same setup, but on a smaller time frame.
Yes.
So your entry price, stop loss 1 and stop loss 2, TP1, TP2, TP3 is the same as your daily, but calculating for the smaller time frame. That means you do not use if you're trading a smaller time frame, you do not use the daily candle entry, stop loss, profit target.
Understand. Great. I hope that answers your question for Dennis, Joshua, and John. Okay, so Jean is asking, do you look at or combine with other TA or candlestick pattern or trend lines, support resistance to trade this?
Yes, part 3. Now only part 2.
Okay, understand. Okay, okay, good. That's the questions we have for part 2.
Happening now. Pound Swiss. Happening now. Okay, I remove this green color so you can see. So what I love about this strategy is it's a very easy eyeball. Don't have to worry about so many indicators, which will come to part 3, that, hey, I think this trade can take. So you notice that sometimes that things that happened in the past already happened now. But this is happening now. The question is, should you take or should you not? Personally, for me, I will not. This is a little bit advanced, mainly because my entry price is here, or my closing price is here. So by the time this candle has to go all the way up before hit entry price, I'm a little bit tired already. So anytime there is a long, far away that the price needs to go higher, I will not. But I'm showing this purposely because to show you that this is happening now, and you actually can see it happened at this very moment now. Question now is whether should you take or do not take. In this case, I don't take. It's mainly because by the time it hit my entry price, when my price already just here, I'm tired. So that's why I don't. So that's why I will prefer if the price, something like this, very near to my entry price. Does it make sense? Okay. So I don't like my entry price when my entry price is very far from my current price. That means the price now has to drop before I enter. Nah, I want the moment very near, enter. So I love that kind of setup. Okay. Yeah.
Okay, before we move on to part 3,
Yeah.
just one more question from Stanley.
Hmm.
For the 3 candle setup, uh, now there's a second, let's say for a black, white, white setup. The first and second white, let's say the first white is taller than the second white. Okay, so the second white is shorter. That means the high of the second white is shorter than the first white. The entry price.
No, not this. Hold on. Let me find. Let me find that.
Yes. Okay, black, white, white. Okay, so the second white.
Hold on. Also, it's also, you notice it's easy to find this setup because it's rather than using indicators. That's what I love about this. Okay, yes, back to you, Richard.
So the first white candle is the high is higher than the third candle's high. So now the entry price is on the high of the first white candle or the second white candle.
It's always the third candle will determine your entry.
Ah,
The third candle will always determine your entry. Now is stop loss. That's where you need to ask yourself, is this candle high to low bigger or this candle high to low is bigger? In
the
this case,
second white.
the second white high to low is bigger, so this will be your stop loss. Smaller, not bigger,
Smaller,
smaller.
huh?
Then your die my stop loss is the lowest of the three candle. That's your die my stop loss. So you notice that we totally ignore this at all.
Understand. Okay, wonderful. Stanley, I hope that answers your question. So, John, let's move on to the third part.
Okay, the third part, that's where we use the indicator. We use an indicator for a few reasons. We use indicator, first of all, to tell us two things. Indicators can tell us a lot of things, but we use indicators to tell us two things. One is, what's the trend? Second is, whether is it overbought, oversold. I'll come to what's the trend in a short while. Now, you can use stochastic. A lot of people use stochastic. A lot of people use RSI or Williams or anything. So you can use any indicators, but mainly you use indicators to tell you, for first part is to tell you, is it overbought, oversold? Technical term in English, it means, is it now very cheap or is it now very expensive? That means it's cheap to start buying or is it expensive to start shorting? Is it cheap that is not worth shorting or is it expensive, not worth buying? You notice there are four scenarios. Cheap that you can buy, cheap that is not worth shorting, expensive that you can short, expensive that is not worth shorting. See the scenario? So there are various indicators that you can use, but there's also an indicator that you cannot use. Example, a lot of people love to use MACD. But MACD doesn't tell you that it's cheap or expensive. So which is why you can't use MACD. You cannot use moving average. Like example, in my chart here, it's all 200 EMA, 200 SMA. A lot of people use like 20 moving average because 20 moving average doesn't tell you that it's cheap or expensive. So understand that. So you got to use indicators that you prefer to tell you whether it is overbought, oversold, / cheap or expensive. So some of the indicators that you can use in cheap or expensive is like stochastic. Okay, stochastic. You can do a setting of stochastic 533. Some people use 1433. Your choice. So stochastic 533, for example, basically tells you that if the blue line is below 20, that means this is in the oversold / cheap region. A blue line is above 80, this is expensive / overbought. Okay, so now I want to buy. That means I want to buy when the price is cheap. So I'll be looking out when the price is cheap. In this case, there is no black, white in here, so I cannot buy. This is somewhat cheap, not very cheap, but somewhat cheap. So now the question is, do you want to buy? Maybe, but a little bit. You know, like shopping, it's not the great sale, just a normal sale. So if I buy, I don't buy big items, right? I wait till the great sale, then I buy my TV, buy my computer, buy whatever, okay? But it doesn't happen all the time. So now I got a sale oversold, and I got a black, white. Okay, don't move. Okay, now I got a expensive, I got a white, black. I got a expensive, I got a white, black, but never hit entry price. Okay, I got a, let's find a cheap one. Right here. Oh, look at this cheap. Oh, look at this cheap. Like white. Oh, very cheap. Oh, now some of you knows that if you've been listening to me, I love hammer. It comes at the same time. Start saliva dripping. So I hope that you understand that when you combine expensive with this trade signal or cheap with this, no cheap here, no cheap here, got any more cheap or not? Got one cheap here, one cheap here. Then you can go shopping. This one never hit entry price. Okay. This one cheap, but no entry price. No trigger, no setup. Okay. So part 3, you can combine this with indicators, and it will increase your probability of success. Back to you, Richard.
Cool. Okay,
Yeah,
great.
this also
So
applies to smaller time frame.
this also applies to smaller time frame. And this oscillator you're using is stochastic 533,
Yes. I mean, it can
and
be anyone that you prefer, but
right,
yes.
right. So you're using 533 here, and the levels are 20 and 80, correct?
Yes.
Okay,
It can
so
be
in
RSI.
okay, understand. Just use some oscillator that can give you an idea of whether the instrument is oversold or overbought, right?
Yes.
And then what you want to do in this part 3 is to buy, look for buy setup when it's cheap, and then look for sell setup when it's expensive,
Yes.
right? As an additional filter, lah.
Yes.
Understand. And the active hour filter is also on.
Definitely.
Okay, understand. So, for those of you who are attending us live, and if you have questions, please feel free to post into the chat box on your screen for the part 3 of Jonathan sharing, where he combines the oscillator indicator into as one of the filter. All right, so please type your questions in if any. Let me now look at the questions. Okay. Norris is asking whether this stochastic 533 works with indices.
Yes.
Hmm,
Everything.
all the instruments.
Indices, crypto, forex, stocks, but just take note, stocks will gap up, gap down, everything.
Hmm, okay. And Stanley was asking related to his earlier question. Uh, what if the second uh, white candle in a black white setup? What if the second white candle is entirely being engulfed by the first white candle? It's still uh, the same to decide which is the entry price and the stop loss. It's always to use the second white candle for the entry price, right?
You're talking about oops. You're talking about setup that looks like, hold on, let me draw. Wrong one, wrong one, wrong one, wrong one. You mean like that?
Yes, yes.
You
Black,
only see
white.
this, yeah, you only see this in stock market, because you will notice that forex very seldom got gap up, gap until like that one. So
Because it's
yeah, but the
continuous,
setup
right?
will still be the same. The
Mm,
setup will still be the same. I don't care. The very simple is always the third candle will determine my entry price. The only time I consider the first candle, which is the second, first white, which is the second candle, is only to compare where's my stop loss. That's it.
understand. Okay, Stanley, I hope that answers your question. Let me see. Okay, R is asking whether can use ADX to determine directional bias. But
Yes, you can.
ADX does not tell direction, it tells trend strength. So I
Uh,
think you meant DI
the blue
plus
line, right?
DI minus.
Ah, yes, you can. So that means if let's say, for example, red is above the blue, then you only look for white, black, black. You don't bother with black, white, white. Yes. At least you have your direction is certain directional bias. Yes.
Cool. Okay, R, I hope that answers your question. And Amanda is asking whether white, black, black, does the candle need to be shorter than the candle before? And I think John has answered that question. The size of the candle does not matter. It's
Yeah.
about the color.
Women may disagree, but size doesn't matter. Sorry. Sorry.
Okay, we are all above 18 here. Okay, so Amanda, the size does not matter when it comes to determining whether it's a bullish setup or a bearish setup. The size of the candle only matters for the calculation of the stop loss, and therefore, basically, is to calculate the risk,
TP1,
and then
TP2,
the risk
TP3.
is to use to determine the TP1, 2, and 3 as well. Okay, so let me see. Okay, there
Example,
were
quick one. Can you
yes,
see pound cat daily candle? And this is happening right now.
black, white, white.
Black, white, white. See here.
Mm,
So today are we bullish or bearish bias? Today we
bullish,
are bullish bias, right?
correct.
Remember just now this example was just now that I show you. Black, white, white. So it's happening now. You notice I use the daily to give me smaller time frame, daily bullish bias, smaller time frame. I only look at bullish bias. And what's so special about this setup? Just happened. I was looking at the chart
This is
because
15 minutes.
15 minutes.
Okay.
Because this at the same time is cheap. So you notice you
Mm,
combine part 1, part 2, and part 3 together.
understand. So the daily time frame, pound is what?
Pound cat.
Pound cat. Pound cat. Okay. So pound is active hour, but cat are also active. So these are
Yes,
active hours. Daily time frame is bullish. And then when drop to 15-minute time frame is you look for long setup, and
at the
just
same time.
happen there is a cheap sale that just happened. So this bullish setup has a high probability. Understand. Cool. So let's
In
see.
this case, you cannot use ADX for smaller time frame.
Mm,
Reason is because ADX, if you understand ADX will always be slower.
DI plus DI minus, you mean?
Yes, will always be
Okay.
slower because
Mm,
you will be always looking for short, but this is not.
right, right, right. Okay. So of course, for those more advanced traders, you can take the principles that Jonathan has shared to apply it using your own favorite indicators. And for those who are a bit more on the beginner side, I think just follow what Jonathan has shared and is using would be better for a
Mm,
start.
mm,
And make sure that as a disclaimer for Jonathan as well as the organizer and myself, all these are not trade recommendations. They are just for educational purposes only. So please do your own due diligence and do your own back testing and trade in a demo account until you are competent and confident before you trade real money. Right,
mm,
John?
mm. We haven't
Okay.
end, right?
What?
We haven't end, right?
No, no, not yet, not yet.
Okay. I still got a few
Yeah,
more things I want to share.
yep. So that's all for part three. I don't
Okay.
see any new questions. So let's move on.
Waiting for me now?
Yeah.
Yes. Okay. Now, when not to trade. Now, the next part is when not to trade. So this strategy doesn't work well when there is no trend. That means the market is not moving. Example, how do we know when the market is no trend? If we use an indicator, for example, like moving average, a lot of people use the 20 candle moving average. So when the 20 candle is about flat, this is not flat enough, but about flat, like this strategy will not work that well. So when you notice the 20-day moving average is about flat, it will not work that well. Okay. Or some people use, instead of a 20-day moving average, they use like Bollinger Band. When it is squeezing, it also doesn't work that well. So take note of that. Okay. So whenever you notice Bollinger Squeeze or the 20-day moving average is flat, don't use this strategy for daily or even smaller time frame. It doesn't work that well. So whenever you see it, avoid trading it. So at least you take a break or look for other counters to trade. Okay.
Right. So,
Using ADX, you also can tell you that when the trend is weak, you can also use ADX to avoid it. For the person asking about ADX question.
correct. So ADX can tell trend strength. So when it's
Yes.
below like 25, then it's like quite trendless. Yeah.
Yes.
So for what Jonathan just shared is moving average, simple moving average.
Simple moving average. Yes.
Okay, 20. Basically, plotting a Bollinger Band will give you that 20 moving average along with the band. So, and there were also some questions about whether this strategy works on a sideways market. So, based on this that you just mentioned, just share with us, is that it is not so good. So, it's preferably in a trending market.
Mm.
And to tell whether it's trending or not, can use the 20 moving average, whether the slope is flat or not, right? And also using the ADX, which you have just added to the screen.
Okay, so the green line below 25, that means it's trendless. Usually we don't bother. Look for other things to trade.
Mm, understand. Okay, got it.
Okay. Now, I do understand that a lot of you are anxiously wanting to start to practice. So I can tell you one hint. Blindly trade Germany DAX 15 minutes, you will be profitable most of the time. I wouldn't say all, but most of the time. That means blindly trade all the bullish and bearish signal right now after 4 p.m. because of daylight saving time. So after March will be 3 p.m. If you blindly take every trade, start off with demo account first. Don't start off with real account so that at least you know where is the entry, stop loss, profit target. Germany DAX is blindly take a trade. Usually you will find quite profitable. It's just a question of how much. And even if you lose money, you lose a little bit. But when you make money, it does cover your losses. So Germany DAX 15 minute is the best way to start practicing. Blindly practice. That means just look at 15 minutes. I don't care what's daily. If I know daily, even better, but I don't care daily, so I just blindly try. So if you like to start off with this, blindly try Germany DAX 15 minutes. That's my tip for all of you today.
Excellent. So again, please do it in a demo account first. Do not trade in a real money account until you have gained the experience and the competence to trade in a demo account first. All right. This is for educational purposes.
It's not only that, because a lot of people may not be used to looking at 15-minute chart. 15-minute chart to some people, especially those that are trading stocks, will find that it's a little bit fast. So you just have to get used to it. Then you realize that it is not that fast. So that's why try demo account first. Because if you try with real account, and if you notice that if you accidentally key something wrong, it will damage your account. True story. Sometimes people thought I'm trading like 0.1, and then suddenly in the urgent become 10. Then you cut. That's it. Your account, bye-bye. So you tend to make mistakes. And when you trade with real accounts, it's better to learn mistakes in demo account rather than learn the mistakes in real account. But I don't say that you doesn't make mistake. You still make mistake in real account, but at least it's not obvious mistake.
Got it. Okay. Thanks, John. Okay, let's move on.
Okay. The other easy trade. Now, how many of you realize that Aussie dollar, Euro dollar, pound dollar New Zealand dollar, dollar Swiss, dollar yen. What have they in common? US dollars. You will notice that this strategy on daily candle works very well. I know some of you don't trade US dollar indices, but if you know where the US dollar is going, you will then know where are the major pairs going. Am I right? If you know that US dollar is going up, that means you'll be looking out for euro dollar to short. Makes sense, right? So this strategy works very well with US dollar daily candle. Here doesn't work. Yeah, because never hit entry price. Huh? Here works for 1 day. After that, took. Okay. And then there. And then there. So the moment you know where US dollar index is going, you will then know how to trade Forex a lot better. Over to you, Richard.
Okay, got it. Thank you, Jonathan. Okay, let me see any last questions. Hmm. Okay, Joe is asking about understand he understood the setting of the stop loss position, but he missed the profit target part. So
Mm,
basically the stop loss, which is the risk, is your TP1. Oh, Joe?
SL1 equals to TP1.
Correct, correct. And then if you want, you can also have TP2, TP3 using the same R, the same risk.
Mhm.
Okay, Joe, I hope that answers your question. Um, okay, no new questions. I think we have clarified the all the parts that you have covered, John. So if is there anything else that you'd like to share?
For me is this is just one of the strategy. For me is there are more strategies that one of them I love to use it if you combine the Oreo together with hammer and shooting star. What I'm trying to say is on a daily candle, if you have three candles, Oreo, the white, black, 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 white, white. If one of the three is a hammer, if one of the three is a hammer, your probability of success will be a lot higher. If one of the three for a bearish is a shooting star, then your probability of success is better. So if you'd
Mm,
like to know more about hammer shooting star, it will not be covered today. In fact, it's all pure recorded already. You actually can go to Facebook, Gathering of Traders, request to join, Gathering of Traders, and then you just click on the more files. They are right here, strategies that can help you. Like just now you say, what if it's gap up, gap down, the third candle become like uh, second candle engulf the third candle? That will be called the harami. You actually can watch the video and get the indicator here for free. And you will notice that in Telegram, like for example today, spa. Who goes to spa? Huh? Anyone go spa? What is spa?
I think it's
Spa is
Spain.
Spain. Yeah. So if you take a look, triggered earlier today, bearish Oreo. So that means this basically tells you that spa, Spain, spa, daily candle today. It entered today and you just hit TP1 today. So these are what a lot of people be asking me. That's why I thought share with all of you. Like Litecoin was triggered 2 trading days ago and just hit TP2. Litecoin triggered 2 days ago. Two, 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 two. Wow. Here was a setup. If you have shorted here 2 days ago, right now would have hit your second profit target. So that's what here happens. Like London triggered 2 days ago, just hit TP2. London. This was the setup. You would have shorted here on this day, 2 days ago, and right now just hit TP2. So that's why if you like to get all these alerts, you can just search for Telegram Gathering of Traders and just request to join. It's all free. You can even get the real-time trade alert with trade signals, market analysis, and even the setup all there.
Very cool. So maybe I'd like to just summarize this part, which means that if you like to receive the analysis and also be kept posted of these trade signals and more, please join Gathering of Traders in Facebook as a Facebook group and the Telegram channel Gathering of Traders. So please search for Gathering of Traders in Facebook and Gathering of Traders in Telegram, and you can join it. And then that's where Jonathan provide a lot of his sharing in.
Yes, and if you want to look for my YouTube channel, just search for Jonathan Tan Singapore, and you can find my YouTube channel where I post market updates every single week.
So that's the third social channel that you can follow John at. So basically, it is a gathering of traders in Facebook as well as Telegram, and search for Jonathan Tan Singapore in YouTube and subscribe to his YouTube channel. And as that's where he shares his weekly analysis. Correct?
Yes.
Okay, wonderful. So, thanks a lot for sharing all these very useful insights with our attendees for the four parts on how to use the Oreo, the complete setup, and also take so many of the questions that our attendees have posted to you, right? And to all the audience here, thank you so much for your time, and sorry about the technical glitch at the beginning, but I'm glad we got that sorted out. And yes, this webinar is recorded and you can watch it again to revisit any and every of the parts so that you can get familiar with the Oreo strategy, a simple strategy that works that Jonathan has so generously shared with us. So, Jonathan, thank you for your time. And any last words to share with our attendees?
Watch the market closely because we should be having a major market turn. I'm not saying now, I'm not saying tomorrow, but within the next 3 months, we should have a major market turning lower high within the next 3 months. A major one that should last for quite a few months. So it's the
Wow.
best time to look at the market right now. It's the best time to start practicing because if you wait till then to learn and practice, we will already be running, whereas you will only start learning how to do it. Doesn't mean that you cannot take advantage of the market, but you will be a little bit behind. So that's why I'm very excited about the next 3 months in the market.
Wonderful. Thanks, John, for that tip. So the best way to be kept posted when the market turn is coming is to follow Jonathan in his various social media, his YouTube where he shares weekly, and I'm sure when it happens, he will share with us there. So thanks again, Jonathan, for your sharing, and thanks again to everyone who have attended in the webinar room as well as watching us on YouTube. So that's all for the webinar tonight, and I wish everybody good health, stay safe, and stay green. Okay, thank you, and good night, and I'll see you at the next webinar. Bye
Good
bye.
night. Bye bye.